Hi, and welcome to the Hub Live Market Q&A with Rob Roy. Rob, you got me today. Dux is out and about. How's it going?
Good to have you, Manny.
Well,
How's your
thank you
day?
for having me. Before we dive into the Q&A, we've got lots to talk about in this long, short week, it feels like. But don't forget to like and subscribe to the channel. We're growing every week. Thank you very much for your support. So, Rob, do you want to kick off with the Qs this week?
Yeah, absolutely. And just my nasally sound, I apologize. I had an allergy attack here just before we started, which is really bizarre because it's been raining every day here in Florida. So I have no idea why I would be having problems with pollen, but that seems to be what's going on today. So if I sound nasally, I just want to let everybody know why. All right, so let's take a look at the Qs. And we've had a little bit of a move down. The markets are off the lows today, but if you've heard any of these broadcasts that are any of the recordings I've done before, you know, I'm a big fan of a 45-degree angle move. I don't like it when things start to go vertically because what goes vertically up often comes vertically back down. So right now, all I think is going on is that we are correcting this move to the upside that got a little bit vertical. So it's coming back in line with that 45-degree angle line that I drew, as you can see. When we look at the 10-day moving average, depending on where we close today, we could close at or above it. Yesterday, we opened on the low, closed on the high. Will that happen today? It could. We still got a little bit of time before the close. So I don't think there's anything to be too concerned about yet on the Qs. We are still in the wave 3, though. And at some point in time, the wave 4 starts. There's not a tremendous amount of separation between the 10-day and the 50-day moving averages, but there's a little bit. And I still think that even though it hasn't materialized so far, and it doesn't mean that it has to, there could be a little end of quarter window dressing moving into June 30th for some underperforming fund managers. Another thing that occurs is, the Magnificent Seven or whatever they're calling it, of the stocks that have driven this market to the upside, not just with the Qs, but the S&P as well. You don't want to be a fund manager that reports your quarterly returns to your investors and you don't have those stocks in your portfolio. So what tends to happen is there's some movement around and they acquire those so that at least they show that they're owned in the portfolio, whether they had them for the run or not. And that's what window dressing means. It's kind of misleading a little bit at times, but perhaps everybody has them. So if everybody already owns them and nobody has to go buy them, then that's not a catalyst for them to move higher in this last week of June. But it is a thought. It's happened before. And so those are just things I like to share that are possibilities. But for now, I think this pullback has been very constructive. I think it's been needed. The more vertically we went, the harder the comeback would have been, pullback would have been. So we'll see where we close today. I think that'll be key. It would be more ideal to close back above that 10-day moving average again. And then we'll see what happens in the last week of trade next week.
Absolutely, and we're definitely off the lows of the day. It feels like we could go nicely. So let's see how it all pans out for the rest of the day. But it's been a short week, but there's been some decent price action in some of these names. One name that we've been talking about on and off is CarMax, KMX.
Yeah.
Look at this guy. This is that little puppy bounce.
It's kind of nuts, isn't it? I mean, we've known that the whole used car phenomenon was big for a while, but we thought at some point that it was gonna back off a little bit, but not so much. Not today, at least. So there was the run before, and it's had a nice move off the lows from March and April, and then you kind of have to wonder, Mehdi, don't you, if that's maybe a blow off top with this move here, people really chasing it on the end. But I know I went with my son to trade in his truck, and they gave him 10 grand over what he owed on it, and he was only right about break even, as far as whereas he wasn't upside down, but he didn't have equity either, so he was kind of about break even. And so, yeah, they're still paying premiums for used vehicles. There's no doubt about that. But yeah, so I don't like the vertical stuff, and I don't like the gaps up. So I would not want to chase this one at this point in time, but certainly in the news today, and an impressive move.
It's funny. I was looking at selling my car as well. I may as well take advantage of it fairly soon. So I'll dive on that CarMax bandwagon.
Yeah, gosh, if you want to trade in a used car for, I mean, I'm not necessarily a fan of new cars because, they devalue as soon as you pull off the lot, but you're getting that extra value now with the premium on the used car. So
Yeah.
it's a little, it's an opportunity, really. Yeah.
So we got a question from Ren, Enphase, ENPH. How are we looking at this one?
Gosh, a lot of people ask about this stock.
It's a popular name.
Yeah, it really is. And until we started doing all these, I really wasn't that familiar with it. But so many people watch this. The key here is, can we hold this doji? Right now we have a doji on the chart, but of course, there's still an hour or 2 hours to go before the close. If we sit right here at 160 with the doji, we're a little bit oversold. We're a little away from the 10-day moving average. Anything energy has had a rough time. But it looks like perhaps you could get some sort of a short-term bounce here. We tried to run up, and all we could do is hit the 50-day moving average here through pretty much all of June. Backed off a little bit, tested it again. We still have this gap up here. So I try to classify things into what look like good, longer-term trades and what look like, potential speculative bounces. And I think this could fit in that category. It's a really easy one from a risk reward standpoint. You could look for, especially if the doji holds into the close, a bit of a bounce off of here, perhaps back up to that 10-day move, or excuse me, the 50-day moving average at 180 again. But if it breaks below 160, that's your stop and you're out. So from a risk to reward standpoint, looking at this for a short-term bounce trade, I think makes a lot of sense. But once again, it's not good. It's the old, I know Dux loves this. You probably do too, Maddie. Maybe you haven't heard it either, but it's Katie bar the door.
I've definitely heard Katie bar the door.
Yeah, if we break below 160, that's what's happening there. But it could give another run up to that 50-day moving average. So yeah, from a speculative bounce, I just want to be really clear that I'm not saying it's a long-term buy or anything. Speculative bounce trade, it makes some sense, and you've got a really tight stop. So yeah, that makes sense.
Speculative bounce in capital letters there, Rob.
Yeah, I got it.
The questions are coming from all over the place. I just got a text message about Virgin Galactic, SPCE.
Yeah, interesting here because they finally started to get their space stuff going after some mishaps and unfortunate instances, and so the stock just tanked from where it once was way back up here with the potential for the commercialization of space, and then they decide to come out and do another a secondary offering, so that dilutes the float and just took all the wind out of the sails that had been created over the past few days with the positive news that they were about to get going again, and and perhaps they were going to start sending flights up, etc. And so they had all that good news, and you got to wonder, Mehdi, don't you? I mean, with where the stock was, couldn't they have waited a little longer?
It would make more sense, right? Hang out a little bit, let it run a little bit, and then do the issuance.
Exactly. Yeah, let it run a little more before you do this. So that makes you wonder, do they know something we don't know? If they are willing to do that secondary offering here at this price, perhaps things aren't as good as what the publicity had been. So I think this is a tough name now. And when you dilute the float like this, often you kind of go on a trading range. So if you want to put some sort of a sideways position on between 3 and 6, perhaps a butterfly or something along those lines. But as far as directionally, I think they just shot themselves in the foot on any potential move there. Hard to understand that move, really.
Well, we'll have to have a word with Richard and find out.
Yeah. He's a smart guy, so that one's troubling. You scratch your head on that one today for sure.
Exactly. And Will's come in to us, Palo Alto. He's trying to take a little break from work, so we'll see what we think about Palo Alto. PANW. Yeah,
that's been one that I've traded on and off for quite some time. It's in an awesome pattern. Nice wave 3. Kind of in the 45-degree angle, borderline on a little bit vertical, but not too bad. I like to look at the DMI when we see a pattern like that. You can see that the ADX is above 40. That's a little bit of a concern, but it's still moving up. And, you know, when Wells Wilder created the DMI, the scale is from 0 to 100. Rarely do you see the ADX go above 60. So why he created the scale from 0 to 100, I have no idea. But he's far smarter in math than I am, so I don't question that because I love the indicator. I think it's a really good one for measuring the strength of moves. And as long as that ADX is moving up, there's potential for Palo Alto to move higher. Now, the concern would be if the ADX breaks back down below 40. If it breaks back down below 40, that's your exit signal. So it can stay above 40 and still show strength. It can even climb higher. As I said, it's rare to see the ADX get much above 60, but right now it looks like this one's just motoring ahead nicely here. So it's a good space to be in too, right? I mean, all you hear about is cyber threats almost, it seems like daily, but certainly weekly. I like this one. It's a good company and nice strong wave 3. I think we could see some higher moves from here.
And security seems to certainly be the topic of the day to, you know, for a long-term kind of thought process. It keeps you involved in that space.
Absolutely.
Speaking of common themes, AI, C3 AI. Let's have a look at that one. And
yeah, this is
AI.
Yes, yeah. This is another really popular AI name. We hear about this one a lot. It suffered a downgrade today, which is what pushed it even lower. Now, the key here is you can see it was in a wave 3, and this is what I don't like, Mehdi, is this more vertical move. You know, not the same chart pattern that we just looked at with Palo Alto. So that's too vertical. Those tend not to hold, and then you get, you know, a downgrade on top of it. So we're coming back down towards the 50-day moving average. We're coming down towards an area of support right here at 30. It's also where the wave 4 forecast is, which I'll be surprised if the software doesn't label that. By the way, the HUBB Financial software is the best LE Wave software in my opinion. I'm a big LE Wave fan. I've tried all the ones that I know to exist. I'm going to use whatever I think is the best, and I think this is. You can find out more about it at HUBB.com. But I think the software will label this a wave 4 at some point, perhaps Monday, with this move down. But, you know, you look at this, you're coming down to support, you're coming down to the 50-day moving average, you're coming down where there was a correction level identified by the LE Wave algorithm. So perhaps if you're looking for an entry, we've corrected the vertical move. And another one that you could have a speculative trade here because your stop would be 30. If it breaks below 30, you got to get out because you're probably coming down to 20 or lower. But it could likely bounce off this 30 level. Maybe you give it till Monday, but you could also take advantage of this downgrade today because it's a vertical move lower. So vertically up, vertically down, and you watch that ADX. If it breaks below 40 and the stock breaks below 30, that's a clear exit. But this has been a viewer favorite. We get this one, it seems, week in and week out, especially during TradeFinder on Tuesday nights. It seems to get asked about every week.
Rob, we got another one of our favorites, SoFi, which has got I guess a similar chart as well, because you know, they suffered a downgrade today as well.
Exactly, Mehdi. And, you know, a lot of people are watching this one. And I hope people, when they watch that, you know, we give them these rules for a reason. And hopefully people aren't chasing these vertical moves. I know it's so easy to get caught up into it. That FOMO is real, the fear of missing out. You see something going vertically like that, where it seemingly is going up every day, and you want to be a part of that. You just got to resist that urge when you see these vertical moves. We talk about it so often here. What goes vertically up often comes vertically back down. And this one gave you about as clear a signal as you could get at the top of this vertical move with a perfect doji indecision. It's going to come back down. Well, it's made a pretty significant move down now. And, you know, and the downgrades, you know, Mehdi, when over my time, one of the things I've been very suspicious, if you will, of downgrades. And I think it's important for viewers, traders, newer traders to understand that when you have analysts that work for individual firms, Their job is to make money for their firm, not for us. They don't give out free upgrades, downgrades, etc., to help make us money. They're employed by the firm. So their job is to make money for their firm. So if you're going to listen to an analyst, to me, the only analyst that makes sense to listen to are when you go and you subscribe to an independent analyst firm. That's the only information you can get without ulterior motives, in my opinion. So oftentimes when these downgrades come, and you're seeing it in these charts where they're downgrading on top of vertical moves down already, you wonder, are they doing that to get the retail public to sell because they're interested in buying? And that happens a lot. If you watch it, a stock will be crushed on a downgrade and then slowly goes back up after that. And I've just noticed that. I've been doing this for 27 years. I've noticed that over time. So when you see those kind of things, take it with a grain of salt, and look at the chart. Let the market tell you what's going on. Don't pay attention so much into what the analysts are saying. But here's another one that I think likely labels that way for exact same thing we just looked at with C3AI. And we're at a point of potential support here. Again, if you wanted to take a speculative shot here on this gap down, the downgrade right in the wave 4 area, and this one, your stop would be here at 7. So if you wanted to take a shot here, if it broke 7, then you got to get out. So there's a couple, here that if people, I know they are looking for short-term speculative bounce trades, these are, they've been an interesting session so far, Mehdi, with these kind of charts, and we don't often see all these opportunities for short-term bounce trades, but that seems to be the theme of the day.
And I think Harry and Lisa are quite happy hearing your thoughts on SoFi. So thank you for that, Rob.
Sure.
Ren is into us about block symbol SQ.
Yeah, was in the news quite a bit for a while and then kind of backed off. If we hold this break today, now we have to look to see what happens on Monday. So the reason I say that is we're breaking below the 50-day moving average. It looks like the 10-day is about to cross below the 30-day, which is a bearish signal that I learned from floor traders many, many years ago. That's why it's on the charts. The lime green line is the 10-day moving average. The fuchsia line is the 30-day moving average. And then that royal blue line is the 50. All three were converging here, and we're breaking below all three at once today. So we want to see, and this kind of plays into, is the consumer going to stop spending this summer, right, Mehdi? I mean, if we're going to stop doing credit card transactions, then it's going to hurt this kind of stuff. So we need to see if we get a follow through below that 50-day moving average. In other words, a lower close on Monday, assuming that we close below the 50-day moving average today. If we do, I think that tells us that this wave 5 is underway. And this one, other than or opposite of other trades we've been looking at that are potentially bullish bounce trades, this looks like this could be more of a position downward trade throughout the summer. The consumer tightening their belt, that's potentially what's going on. The 2-10 yield curve, which we'll talk more about in the weekend update, is back to 100 basis points. That's not a positive sign. So if we get follow through to the downside here, I think we're looking at this wave 5 target below 50 here. This could be a good bearish trade.
Well, I'm sure my wife can single-handedly spend her winnings
she can spend the tide real quick, huh? I hear you. I got kids that do that too.
Oh yeah. Rob, Harry's after NU, if possible, please.
Sure. NU Holdings, and this has been one heck of a strong move, and there you go. Well, gosh, right on cue. We talked about the ADX goes up to 60, and look at this chart. There's the ADX going to 60. Rarely goes higher than that, I just said, and man, that seems like we scripted that, but we really didn't. And so you can see that we had a really nice move here. Open on the low, trading near the high of the day. The fact that the ADX is moving down from 60 is not a concern. Again, just for those that may not be as familiar with the DMI indicator, we have good educational information on our website at ewotrader.com on all these technical indicators that we look at, including the DMI. You only get concerned about this if it were to break below 40. So it's got a ways to go. So it's telling you this was one heck of a strong move. It's waning a little bit. So what's going on is some consolidation. It doesn't mean that this move is over yet. A break below 40 does mean that the move is over and you would want to get out. So you can monitor this consolidation. If it can hold and close above that 10-day moving average, no harm, no foul over the last week here, just consolidation from this run up and potentially setting up for another move higher. The algorithm has identified the $9 price level here as a potential target. But again, keep an eye on that ADX. If it were to break below 40, then no more bullish stuff. You're out. I don't know that I would go bearish here because that move was so strong. A little bit of a pullback would be in order then, but not necessarily giving all of this move back. It was too strong on the way up. Yeah, keep an eye on that ADX and watch the 10-day moving average. Two keys there with the potential, if those two line up, of a $9 target at some point over the summer.
Nice. Like it. And that is crazy that it touched 60 and tipped over. That was perfect timing.
Yeah, that's again, it sounds like we scripted that, but we really honestly didn't. It was just,
that was all
example of what we were talking about.
Exactly. Rob, we'd be remiss if we didn't mention Bitcoin.
We would, wouldn't we? Here comes the news, Mehdi, and we did a webinar on this a few months back, talking about the history of what Bitcoin does when it moves into one of those halving. Everybody always makes fun of me for pronouncing that wrong. I don't know which the pronunciation is correct, but it's expected to happen towards the end of the first quarter next year. Historically, at least for the last 3 times, for sure, when it's gone into one of those, it's had a tremendous run up. Nothing's 100% in the markets, but 3 times in a row it's happened. And we're now in that 9-month time frame before it's going to happen again. So is that what's going on this vertical breakout? If you've been watching, you know that I was cautious on this vertical move from 20,000 to 27,000. I was like, we haven't retraced any of that. Keep that in mind. We retraced this vertical move here. We retraced any of these 2 vertical moves, but we had not retraced any of that. Well, we did. We finally retraced some of that, and we held at the wave 3 high. Awfully constructive here from a technical standpoint, Mehdi. The negative is it's a little vertical now, so perhaps it needs to rest as we test these highs, and I would say that's warranted. I know it's up a bit today, but you don't want to see it break above this 31,000 level right now. Because if it does, it's too vertical and it likely doesn't hold. Let's consolidate here for a while, gather some momentum, let the 10-day moving average catch up, and then take off and run. The DMI is setting up to be very constructive for a continued move higher. I'm just saying that it would be better if we consolidate for a bit, gather some more energy and momentum before breaking those highs. And on top of that, BlackRock is starting a Bitcoin ETF, and
they've applied for one. Let's see if they start it.
Yeah, okay, true, fair enough. Thanks for being specific there. And perhaps they're accumulating some Bitcoin to hold the security. Like GLD, they got to have some gold in the ETF. Perhaps it's a combination of both of those things going on that's created this move. But I do feel more constructive on Bitcoin now because we did give some of this vertical move back, and that's just what happens. And that's why I kept saying, even on these runs here, you got to keep in mind that we haven't done that. Well, now we have, and yeah, this one's going to be fun to watch over the next couple of weeks and see what happens.
We'll certainly see some focus on Bitcoin for sure over the next few weeks and months. But
yeah, it's interesting, Mehdi, because it used to be talked about in ad nauseum every single day, and they haven't really been talking about it on the financial networks. But I bet if it breaks 31,000 and goes to those high, I bet it gets back on the radar screen again.
That's for sure. One of our old school ones leads us in with Mickey Mouse, Disney, DIS.
Gosh, awfully close to where I live. I live on the Space Coast, which they launched, and that's 3 launches this week, Mehdi, and I live so close that it rattles the house because they got all these big. This was a a Delta heavy from the United Space Alliance here, and it's a secret mission, so they didn't tell us what's going on. And then we've got, I think there's a launch coming up from SpaceX. Anyway, there's been 3 launches this week.
Awesome.
So I'm close enough for that, but close enough to Disney. And, you know, there's just the political stuff that's going on. It's just, it's a tough environment. You know, Disney's at war with our governor, and it's, the interesting thing here, and if you are looking for an opportunity, you have to wonder. I mean, everybody saw what happened with Target. Everybody saw what happened with Anheuser-Busch. When you get embroiled in these political things, but the streaming has been doing better than expected. The theme parks, I can tell you, are jam-packed. Now, perhaps there's concern that maybe they're not going to be if people aren't going to travel. They told us in the consumer confidence survey that they're not going to be traveling. Maybe that's playing into this. So I think there's a little political aspect here, and I also think that there's maybe some concern that it'll be a lighter summer than normal at the theme parks. But we're below the 10-day moving average. We're getting awfully close to an area that's acted as support in the past. So I think you're getting, sometimes I try to get too perfect on things, and the market doesn't always give you that. A great entry would be if you saw it come back down here to 86, 87, which is the lows from December. Perhaps we don't get there. We're at 87 now. So going any lower might be asking too much. So, this could be an area where there's some safety. If the market does, or the economy does weaken, we start moving into a recession, with their streaming service, et cetera, people staying home could take up for maybe lower than expected theme park attendance. Anyway, my long-winded story here, which I never do that, do I? I never just ramble on. But I think you're getting to a point where this looks like a good valuation, and another one with a tight stop. If it breaks 85, you're out. We've got a gap here to fill. Usually the political stuff will fade away at some point in time. Who knows what's going to happen with the summer travel season? We'll know that pretty soon. But for now, I think if you're looking for, this one would be a bit of this is not a bounce trade. This will be, if you're looking for something a bit longer with good earning power, this could be a decent entry here on Disney, for something several months out, not just a bounce trade. So
it's hard to bet against the mouse, Rob.
Mickey is, he's a little guy, but he's pretty strong.
And on the flip side of the ESG spectrum, I think we've got time for one more, and Ren's coming in with ConocoPhillips.
Help me on the symbol on that one. I want to look it up.
COP.
Oh, COP. Okay. Thank you. That's we look at Oxy all the time. Everybody likes that one because of Warren Buffett's interest. And oil, let's see, had a rough day yesterday. It was down earlier today, but it's come back considerably. It's down 19 cents now on USO, but it was down a couple bucks earlier. We're breaking below the 50-day moving average here as well. And if the consumer is saying that they're not going to travel, does that push oil? USO, every time it comes down to 60, it's held. So if USO breaks below 60, then I think we lose all of these oil stocks, including Oxy. But it's going to try to hold here. And as long as USO can hold the 60 level, there was a surprising build in inventories in the last report where there was expecting a drawdown, but they had a build. So if that's an indication that people aren't going to be traveling, then these oil stocks could be looking for breaks below support. So if you're long this now, here's what I would look at. 100 is an important level of support. If it breaks that, I think I would get out because of the fact that we had a pretty nice little trend line being built here of lower highs. And so that, looked pretty constructive. But as you can see in today's trade, we've broken that and we're holding 100. So if you're long ConocoPhillips, I wouldn't get out yet. If it broke 100, I would exit. And I don't know that this is one that I think even though from a risk reward standpoint, you break 100, that's your loss exit. I just feel like perhaps there's other places that you could get a better risk reward return. We just have to get more information on what the consumer is doing with travel plans as we move into the summer here. So, it's got a pretty nice range there. Maybe something sideways here. If it can hold 100 makes more sense here, but not so much on a directional bounce. But a break below 100 is bearish for sure.
Perfect. Rob, this was a lot of fun. Really appreciate running through all these Q&A questions with you.
I enjoyed it too, Manny, and thanks for stepping in for Ducks, and had a great time. And once again, really good questions that people ask. This is so much fun. Enjoy doing this. I'm glad we get to do it while the market's still moving on. So while we've been talking, Manny, the market has, we were talking about how it was off the lows. It's kind of had another leg down. So it'll be interesting to see where we go into the close here. So I don't know if we had any negative effect there, but yeah, the market has rolled over a bit here during our session here. But thanks for your time, everybody. Appreciate it. Hope you enjoyed the session, and I hope you'll come back again next week.
Definitely. Same time next week, Friday at 2 p.m. Eastern, and bring your questions. Have a great weekend, everyone, and good luck investing.
Take care, everybody.